You're watching Mirror 7 News. Stay informed, stay ahead for more news.
Bitcoin has once again reminded everyone why it remains one of the most unpredictable assets in the world. Just recently, its price dropped by around 3% in a single day, marking one of its sharpest intraday declines in almost 2 weeks. That might not sound like much at first glance, but the ripple effect was enormous. This fall triggered a wave of forced liquidations that wiped out more than $277 million worth of long positions in the futures market. Now, for anyone not deeply familiar with trading terms, a long liquidation happens when traders who are betting on Bitcoin's price going higher are forced to close their positions. It's not by choice, it's automatic. When the price moves against them too far, and they don't have enough margin to cover the losses, the system closes the trade. That's what we just witnessed, on a large scale. And it's not just the amount lost that's concerning, it's also the market signals surrounding this event, PATEs. Trading volumes skyrocketed by almost 80% in just 24 hours, hitting more than $42 billion. In simple terms, a price drop paired with a massive spike in trading volume usually points to heavy selling pressure. Investors weren't rushing in to buy the dip this time, they were rushing out to sell. Technical indicators are also flashing red. Bitcoin's price has slipped below the Ichimoku cloud, which traders often use to judge momentum and possible support or resistance zones. When an asset trades below that cloud, it usually signals that bearish sentiment is in control. Right now, resistance levels are being set around $113, $800 to $115, $500. And if Bitcoin fails to climb back above, it risks sliding further. Analysts warn that if support levels crumble, we could see the price retracing toward the $110,000 region. But, as always with Bitcoin, there are two sides to the story. While bears are clearly gaining strength, some see a recovery path. If buying demand returns and Bitcoin climbs back over $115, $892, it could revive short-term momentum. Market history has shown that these kinds of sell-offs sometimes clear the way for a rebound, as weak hands exit and stronger investors step in. This event also underscores the high-risk nature of leveraged crypto trading. When too many traders pile into long positions during a bullish run, even a modest pullback can trigger a cascade of liquidations. That's what we're seeing right now, an amplified effect where the fall feeds on itself. So where does this leave us? Bitcoin is at a crossroads. On one hand, the increased volume and bearish signals suggest more pain could follow. On the other hand, a swift recovery is not off the table if fresh demand comes in. Either way, this episode is another reminder of Bitcoin's volatility and why risk management remains crucial in crypto trading. Would you like me to prepare another version of this same story, but framed more like a TV news anchor script? Shorter sentences, dramatic pacing, and pauses built in? Stay subscribed for more videos.